Right, let's wait for some people to join. I'm going to pull up the chat on my other monitor, and then we'll get started if I check everything's okay. Perfect, right, just gonna wait for a few more people to join, for everyone to get in here. I'll post about it in the Telegram as well. What's up everyone who's already here? Thank you for being here. Can some of you just let me know in the chat that you can hear me and everything's all fine? And you can see my screen all good. Just let me know you can hear me and everything. Just put a quick yes if you can hear me. Welcome everyone. All right, perfect. Thank you guys. It's all good. Right, I've got a few topics I want to go over. Like I said, I'm going to wait for a few more people to join, and then I'll get into what I actually want to go over. Got a few notes, and yeah. Perfect. Thanks, guys. Thank you for being here. My first live stream in like 2 years, actually, but I just thought, why not get back into it? You know, my mentorship is opening up soon. I want to give some information on that later on. For now, go over some charts, and I wanted to drop some source. What's up, everyone? See how many people we got in here so far. 28, not bad. Not bad to start. I'll give it a few more minutes, guys, and then I'll start getting into some charts. I'm going to do a weekly outlook for next week as well, if you guys want that. Right, first of all, I think I'm going to recap. As I said, I'm going to recap my NQ trade that brought me up to a 10k payout with FTMO. So I have a 10k payout pending with my FTMO accounts, which I will post the certificate to on Wednesday. I think it lands. Yeah, Wednesday it should be. So on Wednesday you'll see the certificate. I know it's important to post about it and post proof because a lot of people just lie, and that is a bad look for the industry. So I am not one of those people, and I'll prove it on Wednesday when I get the payout. By the way, I will be doing a Q&A towards the end of the stream. You can ask your questions. I probably won't see too many of them because I got the chat to my side, but save them for the end of the stream and I'll actively look through them, try answer as many as possible. And then if I don't get round to your question, be sure to DM me or at me on Twitter. Are you going to upload the last video? I'm not sure which video you're talking about, bro. Yeah, I am. This will be uploaded for you guys to watch afterwards. Right, I'm going to get started here. Let's get started on the framework of NQ, right? So NQ right now, the daily time frame. Obviously, we've been trading higher. That's a given. I don't need to tell you that. This is a bullish market. And we do not catch tops in bullish markets. At least we do not try to. That's not our job as traders. Our job as traders is to trade in line with order flow. So that's the first thing you must know. And what are the basics of this whole ideology we're ascribed to? I'm assuming you're ascribed to if you're watching my videos. It is the power of three, which you guys know are accumulation, manipulation, and distribution, right? Accumulation of positions, manipulating those people who have been longing and shorting inside here, then distributing price in the actual direction. That is the very basics of what we're doing. That's it, right? So if you take a look here, we've traded into, if I get the continuous contract up, we've traded into and above all-time highs. Now, when we got to all-time highs, remember, we're building a story behind price. When we got to all-time highs, did we displace lower and start breaking lows and disrespecting down close candles? No. What did we do after getting above all-time highs? We started to consolidate, which is fine. That's actually what we want. A lot of people get scared in consolidations, but that's the complete wrong idea. Consolidation breeds opportunity. And you guys must understand this. Every move, every important move in the market starts with a consolidation. So we begin consolidating above all-time highs. And if you take a look at these lows down here, you'll notice something in a second. When I switch to, okay, that's DXY. When I actually switch to ES here, you will see ES took that low. The 14th of July, look at the low there, and then look at ES. Takes the low, right? So not only have we accumulated positions above all-time highs in a bullish market, we have manipulated now lower, and smart money have left a footprint. What is that footprint? SMT. So when SMT appears, it's not random. It's not just something you should look at. You need to understand what SMT actually is and how we use it. So let's take a look. SMT happens on these lows, meaning all the people who have been selling and buying inside here get manipulated on ES. Hey everyone, thanks for being here, by the way. They get manipulated, right? And on NQ, it shows relative strength. So we've accumulated, manipulated, but now we are showing strength. And look how that candle closes. Look at the sheer momentum upwards of that candle. So now you go onto the hourly time frame, right? So you've understood the context now. Then take a look down here. What happens? What is this? A market maker buy model. SMT is smart money technique or accumulating of positions. It's because these assets, I'm not going to spend too long on this, but because these assets move in the same direction, if one takes a low and the other doesn't, it shows strength in that asset that doesn't. So yeah, market maker buy model now. And remember the narrative, the story that I've just built around price. Okay? The story I've just built around price here. All of that matters, and now we go in looking for an entry. Now all of your fair value gaps, all your order blocks, everything you're all familiar with, now starts to hold for higher prices. When do I look to get in? On this fair value gap, right? Why this fair value gap? Well, it's the same thing I just taught you all. You all know about power of three. So if we're looking for buys on a daily candle, where do we look to get in? Well, we need some form of accumulation, some form of manipulation, and then we trade the distribution. Does that make sense? So when we're here, we have this high above us, all-time highs. Again, what did I tell you at the start of the stream? In a bullish market, we are not picking tops. You're trading in line with bullish order flow until proven otherwise. So then what do we wait for? Well, we have that there, the hourly gap. And now I want to see, like I said to you guys, accumulation, manipulation, and distribution. So remember, this grey box is your hourly fair value gap. And this is going to be a deep dive, guys. So take notes on this. It will be recorded. You can rewatch it. This is an hourly fair value gap. So we've got our key level. You guys all know we want to key off of some form of key level, right? But then how do we engage with price? Now, you could have took longs here. Some of you may have even taken longs here and caught longs. Congratulations. But I wait for external range liquidity to be engaged after 9:30. I wait for external range liquidity to be engaged after 9:30, because 9:30 on indices is often used as manipulation. So what is external range liquidity? Is it any random low? No. It is the product of a price swing. And then when we engage one side of that price swing, that is external range liquidity. So where is your external range liquidity on this depiction here, above this high. Why? Because this is the impulse price swing. So guys, anything inside of this high and this low is internal range liquidity. It is internal range price action. Nothing here is relative to me. When I'm looking for a trade in the direction of that daily candle, and listen to my words carefully, listen to how I'm framing this. When I'm looking for a trade inside the expansion of that daily candle, I am looking first for external range liquidity to be engaged before I enter a trade. Now, this is external range liquidity here. This is also external range liquidity here. Anything inside here is time distortion, meaning TradingView has to print candles for this. It doesn't mean that every candle is relevant to us. As traders, we have to be precise. You must know when external range liquidity is engaged, and it is engaged above this price leg. So when it is engaged, now you can look for fair value gaps. And take a look. This price leg here, I don't want to give away too much, but this price leg here is the easiest price leg you will ever trade in the markets. Period. End of. That is the easiest price leg. After what? After external range liquidity has been engaged in the opposing direction of your drawing liquidity. Right? Anything in here will work for lower prices. Now, that's exactly what I've actually outlined and what I traded off of. So remember, what I just showed you there, reverse everything for bullishness. And it all comes back down to what? Accumulation. If I can do this properly. Manipulation. And then, of course, distribution. The power of 3. It all comes back down to that. So what I showed you in here and where I took a trade off of, we factor in time. Key time for indices, 9:30. Take a look. Right, this line is 9:30, by the way. Take a look at what happens during 9:30. We engage what? Equal lows, but also external range liquidity of this price leg. So this, from here, where my cursor is, let me just make it clear for now. Where my cursor is, down to here, this is one price leg. Now there are mini price legs inside of this. But this is one price leg. It's called a parent price swing. I've taught this before, like a couple years ago. So most of you, probably the majority of you, will not have heard of this before. This is the parent price leg because it is the main swing of price here. All of these pullbacks and then distributions lower are all working inside of here. Until we begin to consolidate, that price swing is not yet confirmed. And then 9:30 does what? Manipulates into the external low. So this is your price swing from this high to this low, right? Now that we've engaged the downside, the sell side liquidity below here, let's label it. Now we've engaged the sell side, okay? Now your entry techniques, your order blocks, your fair value gaps, your breaker blocks, whatever it is that you guys enter off of, now they hold for higher prices. Where did I get in? Here. And what did I just show you on that drawing that I did like 10 minutes is a drag, 5 minutes ago? What did I show you? This price leg is the easiest price leg you will ever find inside of the markets. I'm telling you, after we've engaged that liquidity at a key time, the next price leg after the pullback, meaning leg up, pullback, the price leg after the pullback is the easiest price leg you will ever find in the market. So please take note of that. And when this gets uploaded, rewatch it again, write it down, go into your own charts and look at it. Inside of this price leg, I have made 6 figures in my lifetime inside of trading these price legs. You guys, I swear that is all you need. And people make it complicated. Now there's a lot of nuances, and that's what I dive into inside of the mentorship. There are a lot of nuances to this and a lot of ways to filter out losing trades, things like that. And then a lot of detail inside of here and how we actually engage with it. But for free, I'm giving you this. Take a look at these price legs, please. After we've had the whole accumulation, manipulation, distribution. So I took along from here, and then inside of the 1 minute, I was scaled into my position, half my original position, and I took out, I think, 3.5%. Then I made an extra 6% on gold earlier in the week. So yeah, we had a good week, 10K week, and I'll show you guys the certificate on Wednesday or Thursday, whenever it lands, right? But all of this, nothing here that I've just shown you matters unless you have a prediction on the daily candle. Now, the most important bit of what I just showed you was the very first thing. I was able to predict the next daily candle because of that daily framework, right? I was able to do that because of that daily framework. Nothing else would have mattered that I showed you afterwards. Nothing else would have mattered unless I did that. Unless I could predict these candles here. Okay, and I'll show you on Friday a trade example as well that you could have taken, and the narrative behind that. That's what I'm trying to drill in, the narrative. Okay, does gold adhere to time of day? Yes. Mainly look at 8:20 a.m. onwards till about 10:30, 11 a.m. That's New York time. Look at that, and those are your key times. That goes for Forex as well. But I'm showing you indices. I've been trading a lot of indices recently because it's what we call a gentleman's market. It moves with precision and it adheres to time with precision. So all of that framework only mattered because I could predict the candles here, right? And as long as you guys understand that, you are well on your way, and you are so much better than most educators on YouTube, because they just show you patterns and gaps, and all of that's cool. We all know what a fair value gap is though. You can work out what a fair value gap is within the first 5 minutes of learning these concepts. That's why I teach you guys to build a story behind price. It's all about narrative. Now, I dive more into this inside of the upper class that I am releasing. By the way, real quick, if you guys are not on the waitlist, make sure to click the top link in my description. Sign up for the waitlist because it closes on Monday. So if you want to be a part of what I'm building, then sign up for the waitlist, right? Make sure you're over there for one-on-one coaching if that's what you want. Do I trade GBP JPY? Only when the dollar is consolidating. So that leads me on to another teaching. Why not dive into this teaching now? Intermarket, right? You guys know there's a million markets, right? But one market leads into another, and it can tell us about the other markets. What do I mean? Well, DXY is the king. Think of DXY like the king. Nothing moves without DXY doing something. Meaning, DXY can do multiple things. You guys know this. It can go higher, it can go lower, it can do nothing. But each one of those three tells us something and gives us more information to take a look at the markets. Now, you might think I'm rambling, but I'm going to answer your question. Do I trade GBP JPY? Only when DXY is doing nothing. So when DXY is doing something and we're predicting it to expand, then I will only trade USD crosses, meaning Euro USD, Pound USD. But when dollar is not doing anything, meaning it is simply going sideways like this here. Let me make this orange so it stands out. Like when we have this, if dollar is trading like that, I look at the individual currency futures. Because why is that? Why is it that dollar does nothing? I want to look at the individual currency futures. And by the way, for those that don't know, this is them. These, the individual currencies. So the yen, the euro, the pound on their own. Why is it? Well, because to trade a pair on Forex, I know a lot of you are Forex traders, so I understand that. To trade a pair on Forex, you want to pair a strong currency with a weak currency, and you want to pair a weak currency with a strong currency. Why? Because it gives the quickest moves. So how do we determine that? Well, you go on the individual currency futures and you look at them and you analyze them the same way you would analyze any other market. For example, the Japanese yen has been trading lower. I told my group, my private group, when we traded into here and rejected, I want to see lower prices now, right? I want to see lower prices from this fair value gap. This is a bearish market, quite obviously. This is a strong bearish market. So you would pair the yen against something that is not as strong, something that is bullish. Look at euro. Okay, euro quite clearly has been going higher, and it was slowly declining as DXY was rallying. So euro is a stronger market. Euro being a stronger market, yen being a very weak market. If you look at euro JPY, it's been going higher, and you can see I've already got markups. Why have I already marked up this order block and it actually moved away from it? I'm annoyed I didn't set an alert there now. Why did I mark up this order block already? Because I was already looking at this. Why was I already looking at it? Because DXY was doing nothing inside of here. So you pair strong currencies with weak currencies and vice versa. And then you come to the pair, and you can see, if I go to the hourly time frame, it's been going higher. The 15-minute time frame, it's been going higher. So when DXY is doing nothing, the currency futures are your go-to. Pair a strong with a weak and a weak with a strong. You'll come to one of these pairs and it will give you a low resistance liquidity run to actually trade. So that is the basics of intermarket analysis and how we use DXY to filter out other currencies, other forex pairs. Now, those of you who end up joining my mentorship will see I do trade forex, I do, but only when DXY is blatantly obvious. I don't bother when it's not. There's just no need, especially when index futures and commodities are right there. Gold's right there, NQ's right there, all of it's right there. These are gentlemen's markets. They're a lot more smooth and less, especially with Trump in office now, less sporadic and move at random times. That's forex has been very like that this year. If you got into forex this year, I feel actually quite bad for you because it's been really hard. The markets have been really hard. So those of you who join the mentorship, you will be made professional traders. Professional traders really do focus on markets like these because again, they're gentlemen-like, they're smooth, they adhere to time. So yeah, focus on NQ. Gold, as for gold, if you guys want, I can recap my gold trade as well that got me up to 10k. Let me know in the chat real quick if you want that or if you want me to go into the outlook for next week. Let me know which one. Outlook for next week or gold recap. I'll do either one after. Oil is a bit of a harder one. Oil's been very, with the war going on and stuff and, international conflict, it's been very hard, right? Because that's a commodity market. It's driven on real world events as well. So it's been very choppy right now. Gold, outlook. Okay, well, the gold recap is simply the same thing, power of three. It was down here and it was trading. Actually, I'll do the outlook. I'll just tell you guys what my trade was and I'll give you a case study. Go into your own charts and look at this expansion that I've put on my screen now. Go on the lower time frame and look at the expansion here. I was trading these candles. What was the framework below us here that told me these candles will expand? Okay, I'll do the outlook. Okay, cool. I'll do the outlook. Which dealing range would you work from on the weekly time frame of gold? You don't need a dealing range right now because it's expanding. The dealing range was this impulse price leg, but we've been into a discount. In a bullish market, it doesn't matter. We should expand from here. We've done our work in the discount. Yeah, I'll do the outlook. Okay, cool. Let's start on DXY. Let me pull up the economic calendar first on my phone real quick, on my other monitor. The economic calendar for next week. Why is that important? Because it's our roadmap of when the weekly candles expansion is going to happen, right? There's a lot of news Thursday, Friday. Okay, cool. So, weekly outlook for the week commencing, what day is it? The 21st of July, right? DXY has been obviously a bearish market, obviously, right? Now, we have now traded into this up close candle here. And by the way, I do weekly outlooks all the time, and I will be doing weekly outlooks all the time, daily outlooks as well inside of the group. If you're not on the wait list, click the top link in the description. Sign up for the waitlist. It is one-on-one coaching. It's the first time I'm ever doing anything like this. So make sure you're signed up to be interviewed. Anyway, weekly outlook. We've traded into an order block here. What did we do? Because you need to react to levels. How does price react around key levels? Does it trade through them? Does it disrespect them? Or does it respect them and go lower? You guys need to understand that. That's the first thing you should ask. Okay? Now, by the way, save your questions for the Q&A section at the end. I'll get more into questions soon. I want to do the outlook first. And then mean threshold is about here. So the weekly candle, look how it closed. We wicked up and then closed back below mean threshold. 50% of that up close candle. Now, we're obviously in a bearish market, and I don't think we're done on the downside. I think this is the target for me, right? 94,629 on the long run is the target for me. Does that mean we're going to go lower from here? Not necessarily. We can seek a retracement first and then go lower. We could even take this high, then drop. But I need to work out what are the probabilities of next week's candle. Guys, the very first thing you should ask when you sit down on the chart is the next candle, whether that's a weekly candle, a daily candle, a 4-hour candle, or hint, an hourly candle, is the next candle a predictable candle? Predictable in the direction of bullishness or bearishness? That is what I'm asking here. I would prefer this next weekly candle to go slightly lower. Now, I am not 100% on this, so I am not focused on dollar. But we always must start on dollar because I told you it's the king. The daily time frame, right? So I'm leaning bearish right now. Again, I'm building a narrative. I'm leaning bearish right now. We traded into that weekly order block, which is, I think, about here. Let me take a look. Okay, I'm way off. Mean threshold was about there, right? Mean threshold about there. But then we're consolidating around that price there, okay? So we have this consolidation now. We had an outside day, a large range day, and now we've had smaller ranges. We could do a few things here. I'm 50-50 right now. I'm going to lean to the buy side liquidity above here, looking at this daily chart. Now the weekly candle, I think in the long run, we go lower. In the long run. But I'm reacting to price. You can make a prediction, but you have to react to price. This looks like an original consolidation. These highs here are too clean for me. Now, get into the second question. If I want to go short on a market, where would I be comfortable shorting? Let's say I want to be short on dollar. Would I be comfortable shorting here? Or would I be more comfortable shorting above there with these highs gone? You'd be more comfortable shorting above here, right? Because then all of this buy side liquidity is gone. You don't have to worry about that. So I would feel a lot more comfortable shorting up here. Therefore, I think these highs get tagged into. Now, I said it's not a market I'm focused on. Why is that? Because it's consolidation. It's smaller ranges. This is not an expanding market. Look at this. That is an expanding market. That's expanding, right? This is not an expanding market. This is a ranging market. So I'm not overly focused on DXY itself. But nevertheless, I would lean to these highs. This is too clean for me. I think those get taken out. So, NQ, bullish, right? Upside. I'm not picking a top. I told you all, my job is not to pick a top. I make money trading in the direction that price is going. I'm not trying to pick the very top. I don't need to do that to make money. When people do that, it's an ego thing. So, what would I look at here? Well, if we want price to go higher, we want to key off of some form of key level, right? Obviously, we want some form of discount to get the best price on the market. Where would that be? Well, and I'm going to give away a gem now from the mentorship that I was going to say for the mentorship, but I'm going to give it away. If we want to see the weekly candle expand, which we do because I'm bullish, a 4-hour swing low will provide you all the liquidity you need for that expansion to happen. Rewind and go over what I just said. If we want a weekly candle to expand, I told you all the very first thing we're doing is predicting the weekly candle's expansion. If we want that to expand, A 4-hour swing low will give you all the liquidity you need for that to happen. So I want this low gone first. This is how we engage with the market. Below here, people are trapped. So when price goes below here, because it's going to rally higher, it's going to start going higher, and then I think they will drop it into this low. After that, people have been tagged. People are losing money at that point, right? And I think this is the key level it might go into, right? This rebalance redelivered. We delivered upside, downside, upside again. This area is the key level we may need to key off of. Order block on the hourly time frame, right? If I look on a 15-minute, there's a nice fair value gap down here. Really, this order block is what I'd be looking at here, right? As the key level. But in order for a key level to be important, we need liquidity for the key level. Price will never move without liquidity. So in order for our key level to be valid, we need liquidity. But what's the liquidity I told you that's going to be important for this market? The 4-hour swing low. 4-hour swing lows when you're trading a weekly candles expansion are all you need. I've said this before. I've made multiple videos on this. But this is a gem I was going to leave for the one-on-one students. The one-on-one students were going to get this and strictly be for them. Now, the one-on-one students, to make up for this, will get a lot more than this. I'll give them so much more than this. But I wanted to give this away for free because it's very important. Too many people are focused on random points of liquidity. Guys, if you're trading a candles expansion, just focus on swing lows. And using those swing lows for liquidity to drive price higher. Okay, yes, that's for every week. That's for every candle, matter of fact. If you want a daily candles expansion, look at a certain time frame swing low being engaged, or swing high if you're bearish. And then you have a key level usually below it. And that is how we key off of. Now, what do I want to see when we reach this key level? And this is going to be quite a long weekly outlook, the way I'm rambling on. But what do we want to see when we get down here? And just before I get into that, guys, look at what this is on the lower time frame. This. What is it? It all falls back on what I showed you first. That. Right? External range liquidity. Because what's our range right now? Again, let me make it clear. This high, this low. Now price is consolidating. So I want external range liquidity to be engaged first. Well, think about the daily and 4-hour expansion. Think about what time frame we could key off of for liquidity. Just think about that, right? So anyway, what do I want to see after that's engaged? I want to see some form of, obviously, range low taken into the key level. Possibly do it again. Hint, hint. Go higher. Retrace. And now I want to see stop runs. What did I tell you was the easiest price leg to engage with ever in these markets? Ever. The one after the expansion. This one after the retracement, sorry. This one and this one will be the easiest price legs you will ever find inside of these markets, and I stand on that. I will stand on that forever. Until I stop trading these markets, I will be trading these price legs. Now, how we trade these price legs, I can't really get into too much because, again, that's for the one-on-one students. But we engage with them in a specific way, and I have a personal checklist, 1, 2, 3, 4, that I use to get on side with these price legs. But guys, these price legs are all you need. You just need to identify them. Exactly. Expansion. When does expansion happen? After we've consolidated. So this whole live is me telling a story behind price. And it is what people get wrong. There's no story behind what they're trading. Expansion happens. Do you see how it ties into one another? When you rewatch this, it will click. I've explained it step by step. And each one ties into the other. But it's all a story. The narrative. Why something should happen. So these are the price legs you're focused on, okay? I'm glad you guys are finding value, right? There's always a story behind what you're trading. This is why I don't mean to bash other educators, right? And there are good educators. There are good educators out there, but it's few and far beyond, right? But there's narrative behind price. Price doesn't just move because of a fair value gap. The fair value gaps are the language of price. That's how we get on side with price movement. But price's movement happens on a fundamental algorithmic level. And that's what people don't get. But that's, for the one-on-one studios. I want to dive into that too much on YouTube for free. But anyway, that's the new NQ outlook, right? And then you have SMT and vice versa. These three averages, you use one another. Okay. Anyway, let's get into another market. As for gold, consolidated market. Am I engaging with a market like that? 1 candle, 2 candle, 3 candle, 4 candle, 5 candle. That's a whole week's price action. Is that going anywhere? Is that a market expanding clearly in one direction? Obviously not. I mean, quite obviously, no, that's not the case. So gold, I'm not interested in. And guys, it's as simple as this. So what have I been through so far? DXY, NQ, gold, right? One of them, I'm very interested in. NQ. Gold, I'm not interested in. DXY, I'm not interested in, at least to start the week. When did I say our red news is? At the latter part of the week. Thursday and Friday is flooded with red news. So when is the weekly candles expansion likely to happen? When that red folder news is. So DXY at the start of the week, I couldn't care less about. It's YouTube, I can't swear. I couldn't care less about, right? So NQ is an expanding market. Daily fair value gap has formed. I'd like Monday to trade lower, expand the rest of Monday PM session, and then Tuesday as well into all-time highs because it's a bullish market. I don't care to pick a top, right? Yeah, NQ is the GOAT market. Euro USD, same as dollar. Really not bothered. Now, Euro GBP. Now this is gonna get complicated. I don't know if I should dive into this too much because it is complicated. This is intermarket analysis again. But Euro GBP, I'm gonna do it anyway. Why not? You guys are all pretty much intermediate term traders, right? So the fair value gap here, right? This is a bullish market. Why? Well, down close candles are being respected for higher prices, quite obviously. You guys, anyone can look at this. My flatmate doesn't even trade. He could look at this and tell me it's a bullish market, right? Very obvious. Where is price drawing to? The highs. This is like a magnet for price. A magnet for price. If you throw, I always use this analogy to my students, right? If you put magnets on the underside of a table and you threw paper clips on top of that table, most of the paper clips would draw to the magnet. Some of them wouldn't, but most of them paper clips would draw to the magnets on the other side of the table. That is like draws on liquidities. It's the same thing. Draws on liquidities are like a magnet, and then the paper clips are price. So some of your trades will get to the draw on liquidity. Some of them won't reach it and fall short. Your job is not to take profits at the draw on liquidity. It is to take profits as we get towards the draw on liquidity. Why? Not all the magnets will land on the I've got that wrong. Not all the paper clips will land on that magnet. Most of them will, not all of them. Your job is to capitalize regardless. So this is the draw on liquidity. This is buy side liquidity. You guys all know that, right? Swing traders have their stop losses where? Above highs. You guys know this is basic retail concepts. What did they see here after we fell short, a drop lower? What did they see here? Resistance. Resistance with another high back here. Strong resistance, they call it. So we've traded down now into a key level and we've taken out, what's this? Is this a random low down here? Is this low on the 14th of July a random low? No, it is on the lower time frame. What's that? That's the same low, a range low. That's the range low. Do you see now? Impulse price swing, time distortion, range low engaged into a key level expansion. So again, what is this? Manipulation, distribution, right? I hope it's all starting to come together a bit more now, right? Range low on the lower time frame. This is all, and ignore that wick, ignore that wick. That is a news wick. That's manipulation. The algorithm does not refer to that. That's ridiculous. That's a news wick. We don't look at that. Pretend it's literally not there. If I do this now, and I get rid of the wicks, look. Expansion, consolidation, manipulation below the low, and now I'm expecting distribution. Why? Because we're in a bullish market. So all of this, nothing matters unless we're in a bullish market and we're leaning towards buy side being engaged. And this is a deep dive. I'm already 40 minutes in. But do you see how there's real story behind the market? Exactly. It's still the same pattern. It is. It's always this accumulation, manipulation, distribution, right? If I put the wicks back on, I'm expecting distribution now on the daily chart. So anyway, all of that's just framework. Euro is stronger than the pound. Euro is stronger than the pound. I'm going to get into GBP JPY, but Euro JPY is going to be better, I think. Why? Because Euro is stronger than the pound. So the Euro JPY is going to give a larger expansion than GBP JPY. Because you're pairing a bullish currency against a weak yen. So the yen is going lower. If Euro is stronger than pound, Euro yen is going to give a lower resistance liquidity run. Up to where? Where it's inside this gap now. Well, it's not even inside that gap. So that's your target right now. That gap, and then ultimately this high. So because Euro is stronger than the pound, Euro JPY, and I bet if you look at GBP JPY, before I pull up this market, I've not looked at this yet, I bet it is not as bullish as this. Right? Nowhere near as bullish. Notice the wicks here. Wick, wick, rejection, wick, rejection, wick, rejection. If we go on Euro JPY, let me pull them up side by side actually. Do you see how that is a lot more bullish than this? This is choppy, this is straight up. Right? Because of Euro GBP going higher. And I still think Euro GBP goes higher. Why is Euro GBP clean out of all pairs right now? And now listen carefully. I know it's complicated. I know it is. You will have to watch this a few times. Why is Euro GBP the worst pair ever? Like, I hate this pair as much as anyone else. Why is this clean right now? This is clean, right? You'd expect dollar to look like this. Why? Because DXY is a consolidating market. I told you DXY is king, and this is just not even 20% of what's taught in the one-on-one, but this is a consolidating market. So Euro GBP is allowed to move in a low resistance way. Now I know it's complicated, I understand that a lot of people get lost in this, lost in the sauce, but this is intermarket analysis. Intermarket analysis is complicated, guys, right? But it all comes down to DXY not moving. DXY cannot, it's not being freely moving in a low resistance way. So the crosses are allowed to move because the individual currency futures have their own price action now because DXY is not moving. That's why Euro GBP is clean. And that's why Euro JPY is a lot more bullish. So Euro JPY higher. The guy in the chat, I'm not sure who it was, who was asking me about GBP JPY. My suggestion to you is trade Euro JPY this week. I think it's bullish, right? And I think it's going up here. Let me look at JPY futures. Yeah, I think JPY futures is bearish. This is a monthly fair value gap. I think we get into this gap this week. Look at mean threshold of this gap and this, the start of the gap as well. But yeah, focus on Euro JPY. What about bonds? Bearish. I didn't think anyone would ask about the bonds, but yeah, good question. The bonds right now, 50-50 for me. I would lean bearishness, and the bonds being 50-50 tells me that DXY, is also low probability, which is a big reason why I'm not looking at DXY this week. That's because bonds are 50-50, right? But I would say if we closed above this tiny gap here, then I would have been bullish at least until this gap, right? So again, if this then that, if we closed bullish above here, then I would have been bullish until this gap. But because we didn't, we rejected it. I'm 50-50, probably leaning lower, just looking at the relative weakness here. And again, ranges. I'm not sure if that high really quick. This got taken. The range low rests down here. But again, I'm 50-50 on bonds, which is why I'm 50-50 on DXY. Okay. Do you wait for the daily candle close to confirm the SMT on a daily candle? SMT is confirmed by changing the state of delivery. So when we close below the consecutive down close candles, that's when SMT is confirmed. Let me take a look on Euro JPY because this has been clean. Let me show you guys. Make sure my laptop's not going to die. Take a look here. All right, this is not nice. Change in state of delivery confirms SMT. Really quick, let me check. Okay, SMT here. Right, perfect. And then let me pull up GBP JPY. Right, take a look at these lows. Right, 14th of July, 14th of July. Right, so pound yen, GBP JPY takes the low, whereas euro yen doesn't. When, to answer your question, when is euro JPY confirmed bullish? It's already confirmed, well, on the lower time frame. When is this SMT confirmed here between the two pairs? When we change the state in delivery. So the SMT is here, right? And now let me go back onto euro JPY. The SMT is here. When is it confirmed? When we close above that, right there. 172,407. As soon as, let me get rid of this. As soon as we close above this price leg here, that is when your SMT is confirmed. Why this price leg? Because this is the consecutive down close candles that traded into our key level, right? That is when CISD is confirmed. With your system, do you use limits on market? Usually market executions, when we confirm the change to state and delivery, for example, I'd have usually limits. When we close above, I'd set a limit on that price level there, and then I'd get tagged in. I'll get into the Q&A real soon. It's been 45 minutes or so. Let me just grab some water real quick. With your system, could you please explain more on the strong weak currencies correlation? Yeah. None of what I just said for strong versus weak currencies matters. This is the first thing you have to understand. If DXY is moving in one direction, and don't apologize, bro, it's fine. None of the individual currency futures matter if DXY is trading in one direction, meaning bullish or bearish. The currency futures only matter when it's like this, back and forth, not clear and obvious. When that happens, you want to look at the individual currency futures. For example, the yen is bearish. I think it's drawing down here. So the yen's weak. The yen is clearly and obviously weak. You find a bullish currency to pair it with, or a consolidating currency. Euro is probably the strongest currency right now. Yeah, euro is the strongest currency. So you pair euro against the yen, which led us, which I just analyzed, to euro JPY. And you can see, look how easy that is. That's a market you want to trade, right? That's a market we all want to trade. So yeah, there you go. Or you can just, trade NQ and you'll be fine. You don't have to do all that. You don't have to complicate it too much. Right now, just trade NQ. All I'm trying to do, guys, is trade a market that's expanding in one direction. And the next candle is clear and obvious. Now, then I say the next candle like that because you can trade the next 15-minute candle. You can trade the next hourly candle. You can trade the next 5-minute candle as long as it's predictable. And that is saved for the one-on-one mentorship. They won't be very happy with me if I give all that away. And one more time, if you do want to learn more, that top link in the description, join the waitlist. It closes in, what day is it today? Saturday. It closes by Monday. So if you want one-on-one coaching, direct access to my phone number, that top link in the description is where you sign up for that. The waitlist closes soon. Why not just trade the currency that's the strongest? You can, but I don't trade futures currencies. I trade with FTMO. I'm 400k funded with FTMO, and I got 10k payout with FTMO. They don't offer just the futures on their own, so I trade the crosses, CFDs, right? What is a correlating asset to look for this? Yeah, silver. Literally only silver. Just look at the silver market and you'll see SMTs forming here. Now silver looks a lot more bullish than gold, obviously, but why is silver freed up to move here? Because gold's consolidating. So when gold consolidates, silver is allowed to move, and vice versa. When silver consolidates, gold is allowed to move, right? I use JPY basket to trade. I'm not quite familiar with what that is, sorry. Yeah, I mean, we've been going for 50 minutes now, right? 50 minutes or so. So let's get into the Q&A section, right? The Q&A section, I'll probably do another 10-20 minutes of that, and then we'll see what it's saying after that. So if you guys have questions, please do drop them one by one. Try not to spam your questions too much, please. I will be scrolling like down, answering each one, as many as I can. If I do not get round to your question, please don't throw a fit. Just reach out to me. I usually answer all my DMs, so just reach out to me. You guys have the links in the description, right? So begin asking your questions, and I'll answer one by one. I'll answer as many as I can. By the way, if you are enjoying this, please do drop a like on the live. Help boost and let more people see it. It will be uploaded afterwards, but if you haven't yet, just a reminder, please do drop a like. Helps me reach more people. We got 74 people in here, consistent. That's very nice. Thank you all for being here. I will be doing more of these if that's what you guys want. Okay. CRT on the 15-minute chart. See, the thing about CRT is everyone clowns CRT. And this is getting into Twitter politics, right? Everyone clowns CRT, but there's a lot of like good stuff in CRT with ranges. I know people bash the creator and everything, and you know, that's a whole different topic. But the ranges work, right? Ranges are real, but we won't get into that. Do you trade only EJ and GJ as your crosses? No, I don't. Any cross that's moving. So it's just because I was giving that example because yen's really bearish. If the CAD was really bearish, I'd be using Euro CAD, for example. It doesn't matter. Any currency future, or you could trade AUD, the Swissy. It doesn't matter, guys. Any currency futures that's strongly bullish or strongly bearish. What about US oil? It's good to trade. It's hard right now. It used to be really good. Like a year ago, it was really clean. I was trading a lot of it then. But it's hard right now because of the conflict and the international influence. It's a commodity market, so it's influenced by real life scenarios. Please, I'm having issues knowing a strong pair from a weak one to recognize more trade. Well, it's just about, first of all, you don't need more trading opportunities. If you cannot be profitable with DXY, EU, GU, and NASDAQ, do not even bother with crosses. It's way harder. Like, it is way harder. This is advanced stuff. Again, it's like a one-on-one mentorship preview. That's advanced stuff. I don't want to confuse you too much. Just focus on NASDAQ and then DXY and EUGU when it's clean. That's all you need. Seriously. Thanks for the information and knowledge. You're very welcome. Thank you for being here. Can we use the same consolidation, sweep of liquidity and distribution on the out? Yes, of course. You would just fractalize the concepts. You would just fractalize the ideas, and that's sort of what I'll get into in the mentorship. You fractalize these ideas of accumulation, manipulation, distribution, and things like that. Please, can you interpret the bonds and the yields and how it affects DXY? Well, DXY does nothing without the bonds. So that is how it affects DXY. It affects it massively. I don't really use the yields. I use these because it's more accurate, and it's just I don't want to analyze too many things. But use these first, use DXY second. Nothing happens on DXY without something happening on the bonds. And for everyone, they're inversely correlated. So if the bonds go higher, DXY should go lower. If they are moving in the same direction, just walk away and trade NASDAQ. Like, that's it. There's nothing more to it. When setting up for an expansion trade, what is the lowest time frame that you can drop down to? Well, it depends on the market you're trading. If you're trading NASDAQ, you can drop, like, I know traders, profitable traders, guys who make real money in these markets. I'm friends with them. I know traders trading the 15-second chart on NASDAQ. Because this idea that a candle's ready to expand is fractal. You can trade whatever time frame. I don't do that. Just too many candles. I can't deal with it. It's a personality thing. I prefer the 1 minute time frame. That's the lowest I'll go on NASDAQ. As for Forex, if you're trading an expansion on Forex, limit yourself to the 5 minute, even the 15 minute. I use the 15 minute a lot of the time if I'm trading that daily candle, right? Use that 15 minute time frame. Which other influencer would you recommend apart from yourself? There's a good few ones. I won't say names, but if you watch their content and they are telling a story behind price, that's the main thing. If there's actual context there and they are professional, that's what I'll say. A lot of people watch influencers for entertainment. Guys, this ain't entertainment. People have real life problems they're trying to fix. You're watching trading videos because you're trying to get out of your situation. I was there as well. So is spending your time watching someone who's jumping around all the time, screaming down a mic, the best use of your time? Right? Like, that's for you to ask yourself. If they're telling a story behind price and they have narrative behind what they're doing, they're not just saying it's a fair value gap, trade this, because they don't know the first thing about trading. I'm telling you, they do not make money in these markets. As long as they're telling a story behind price and they understand narrative, you're probably good with them. Go through my following list on Twitter. That's a good indication. The people I follow are good. That's it. So yeah. Let me find where we are. What time frame do you use for your stop loss? Example, if you enter on the 1 minute, do you use a 4 hour stop loss? No. If you are entering on the 1 minute, you use a 1 minute stop loss. Okay? Wherever the invalidation point is on the 1 minute, use a 1 minute stop loss. So for example, let me not trade DXY. Let me use the example I traded myself. For example, if I'm trading that distribution leg I spoke about, and I want to get in on this for value gap, I'm using a 1 minute stop loss. So I'm entering, and again, I told you this is a professional market. I'm entering. Ideally, I don't want to see it come back down here because we've already worked this order block. So I'd put it probably about here, right? And then I aim for like a 1 to 2, 1 to 3. Okay? That's how you use stop loss. If you're trading a 4 hour gap, you use a 4 hour stop loss on a 4 hour swing low. Do not turn a scalp into an intraday trade. You don't do that. That's how you lose. Never trade and never hold for higher. Never hold through ages because you want to see it go higher. If you're trading a 1 minute, target a 1 minute take profit. Don't target a 4 hour take profit. It's how you nuke your win rate. That's how you just lose, right? How to identify CSD and lower? It's the down close candles, right? The down close candles that trade into a key level. When we close above them, you've changed the state of delivery. So here, these are the down close candles that trade into the low. We have not changed the state in delivery when we close above that. We have changed the state in delivery when we close above that, because these are the candles that traded into it. This is just working inside from this high to this low. I hope that answers your question. Are you on TikTok? I'm not. Would you say time frame alignment is relevant? Yeah, of course. If, for example, I'm only trading this because of the hourly gap. So remember, time frame alignment is relevant. I'm not sure if you mean time frame alignment in the sense of hourly down to the 5 minute. That's just a guide. If that's what you're talking about, that's just a guide of what usually looks clean. But yeah, I'm only trading this 1 minute because of that hourly gap there. So I'm only looking at this expansion because of that hourly gap. So yeah, time frame alignment does happen there. Um, are you familiar with Ali Khan? I've heard of him. I've not watched too much of his stuff, so I can't really give my opinion. Do you think the daily FEG and the hourly FEG are the best one? There's no best FEG, but the easiest levels to keep. But yeah, actually, let me say the hourly time frame and the daily time frame. If you're starting out and you're just trying to get profitable, really focus on that daily expansion. And here's what you focus on, guys, right? If you are just starting out and just trying to get profitable, focus on a daily candles expansion and the hourly entry. That's it. And I swear that's enough. People try to complicate this. You don't need to trade this 1 minute distribution. Like, I'm doing this because I'm advanced. Okay? How would you advise a university student who is learning forex from you to trade to manage time and still be profitable with minimal trades? Um, I was you, first of all. I was a university student learning to trade. How did I balance it? I was studying quite an easy course that is literally I did not want to do. I picked it when I was like 17, 18, and then got to 20, 21, matured a bit and realized I really don't want to do this. Right, I'm only 22 now, but um so I had a lot of free time anyway because my course was easy. I'm like a lot more intelligent than my course needed. Um so I had a lot of free time, but if you're doing a heavy course, just try balance it as much as you can. I mean, an hour or two a day will go far. Like, I understand if you're studying a course, your parents will want you to study that course as well. I get all that. Parent pressure goes a long way, all of that. If you have an hour or two, if you can squeeze that in, maybe in the morning or on your lunch, hour or two, it counts. It will add up. Think, if you're doing an hour or two a day, you're going to get ahead of someone. I'm telling you, most people, well, I've got 16,000 subscribers. There's 70 of you in here. Most people do not put in any effort. And that's not to bash my other subs. I mean, they support me and all. But you get the point. Most people don't put in any effort. Whether that's their fault or whether that's, other responsibilities, I understand both. You're competing against people who are like half trying. So if you get an hour or two a day consistently, that's the main thing, consistency. If you do that, you will succeed in this game. And that's just facts. You just need to know your model, have a model and only trade that model. That's most people's problem. They're trading something new every time they take a trade. I hope that helped with your question. Just out of curiosity, bro, a lot of the free content you have in your channel is very powerful and made me realize you so much more. But who was your mentor and where did you learn these concepts? I've had a few mentors. ICT obviously taught me the basics, and one of my close friends taught me a lot on the psychology side of things and the narrative. So the people on YouTube help as well. Yeah, my close friend was probably my closest thing I had to a mentor, really. So I'd say him. Yeah, you can get a scalp from a swing trade, but if you're taking a scalp, take a scalp. Like, if you're up 1 to 3 on a scalp, take that profit because you've won your scalp. As soon as you turn it into a swing trade, you've lost. Like, it's gonna ruin you in the long run. If you're a scalper, take scalping trades, take scalping profits. What is a PD array? I think that what you're saying, I hear you use it and never got. It's just a premium and discount array, meaning a key level. So, for example, this fair value gap here is a key level. I would call this a discount array. Okay, that's all it is. I can't recommend a broker. I'm not affiliated with any, and I'm not from the US, as you can probably tell by my voice. So I'm not too familiar. I'm sorry. You're gonna have to do your own research. Be careful with the prop firms, though. I will say there's a lot of scammy prop firms about, especially right now. Do you believe that price only does two things, like ICT states? Yes, it is trading to liquidity, or it is reaching to imbalance. That is it. It is either reaching for an imbalance to rebalance and then drive to liquidity, or it was reaching for liquidity. That is it. So he's right in what he's saying. Please, if I'm trading daily candle expansion, what time of day? On the 1 hour. If you're trading a daily candles expansion and you're entering on the 1 hour, right, you do not need a kill zone. But listen to what I'm saying. If you're entering off of the 1 hour, so an hourly gap or an hourly order block, you do not need a kill zone to enter that trade. If you're trading a 15-minute, you do need a kill zone, right? So, yeah, hope that answers your question. I built my current model just watching you achieve it on one more person, so I really appreciate you. Thank you for that. Also, how do I watch currency futures against the crosses? If you're not profitable yet, don't bother. It's too much. It's overcomplicating things for no reason. I'm only giving you that because I know some of you are intermediate and almost profitable. If you're not, just trade DXY. If DXY is not clean, trade NQ. That's it. Seriously. What time frame to use CISD on the weekly, daily, and 4 hour? Well, if you're trading a weekly candles expansion, look at the 4 hour change in the state of delivery or the 1 hour. That's the most, right? That will visually look the cleanest. So that weekly candle expanding, that 1 hour or the 4 hour change in state of delivery is the one you want to focus on. A lot of education given free by you, a lot. Now I'm waiting for the doors opening to your expansion academy, but the secret sauce is left behind. Yeah, I've kept quite a bit away because I was planning to do something like this for a while. And if you do want to join that, remember the waitlist closes on Monday. The waitlist is the top link in the description. Click that link and you'll be taken over to the page. So yeah, if you want to be part of my one-on-one coaching, me sitting down with you and teaching you, then make sure you're on that waitlist, guys. I can't stress it enough. If you're on the waitlist, you will have access to me. You will be interviewed. My team will reach out to you and see if you're the right fit for the program. Okay, so make sure you are on that waitlist. Top link in the description. All right. How long have you been trading and at what age did you start? I've been trading now 5 years. I'm 22. I started at about 17, 18. So yeah, for 2 years I did absolutely terrible. So if you're there and you've been trading a while, whether you're young, old, I swear it doesn't matter. Keep going. Because if you're watching this video, you're in the right place, I'll tell you that. Just develop a model. Just develop a model and stick to that model. As long as the model is repeatable and it has logical framework behind it, you'll be set. That's all you need to trade ever. Thank you. I'm glad you guys are finding value. Have you ever looked at volume profile? I have not, but one of my students does actually look at volume profiles and he finds it useful. And I think it's one of the better things. You can definitely use a volume profile. Sorry, one last question. What's your view on red folders? Is it true that it's better to trade the 3rd and 4th weeks? That tends to be true, but not because of that. It tends to be true because of the monthly candles expansion. If you think about a monthly candle, right? I don't want to go too long into this. I'm already getting tired. But if you think about a monthly candle going higher or lower, the open, if we want a monthly candle, and this goes for any candle. So if you're listening, this goes for any candle. Before I get into this, please do drop a quick like on the live. This really helps and boosts the video. I am going to drop the video straight after. We'll just instantly upload so you can rewatch it. Please do drop a like, guys, if you're finding value in this. If you're looking for a monthly candle or any candle to go higher, and this is why the 3rd and 4th weeks tend to be better in a month. If we want it to go higher, you need an open and you need a low to be created at some point. When is this likely to be created? Because we open here, it's likely to be created. Is it likely to go higher then drop right down? Why would it do that? We want it to go higher, right? So it is likely to be created at the start of the month. Open, low, and then what? So say that takes a week. We consolidate, we make the low, then we trade back higher. That takes a week. Then we get a leg higher that takes another week. We retrace during that week, and then we expand for 2 weeks. until we reach the last few days, and then it does that and trades back down to here. That is why the last 2 weeks are usually the better weeks to trade, because it's distributing. So everything comes down to, and I'll show you again, for the guys who've been here for the last hour, I'll show you guys again. Take a look at that candle there. When's the start of the month? The 1st of May, literally there. What is this? Let me go on the right, continuous contracts. Let me go to May. The start of May is here, right? What is that? And again, I mean, these are not cherry-picked examples. What is that? Answer in the chat. What is being engaged here? What's being engaged here? And again, guys, this is the monthly candle. This was a random example. I'm not doing this to brag. If I wanted to brag, I'd be uploading this everywhere. It's just going to be up here. Thank you. Thank you for the donation, bro. I appreciate that. You're very welcome. I'll do a lot more of these. But what is being engaged down here? And what is this? What have I been banging on about at the start of this live stream? Answer in the chat. Consolidation, yep. I'll wait for a few more answers. Sell side liquidity, yep. External range liquidity. Perfect, guys. External range liquidity. And again, to emphasize, this is not something I picked. This happens all of the time. This is a monthly candle. But how is the low created in the monthly candle? Through this. Accumulation, manipulation, distribution. Manipulation into what? External range low. This is how every low and every high in the market is created. Every single one. Right? And if it doesn't take the low, I'm willing to bet with you it SMT'd with its correlating asset. Okay? So guys, these are the underpinnings of the market. Exactly. Accumulation, manipulation, distribution. Manipulation to where the external range low, because this is your price swing. Anything inside of this low to this high is working inside this price swing. Until we engaged external range liquidity, nothing is high probability. So it all comes back down to that. Again, please do drop a like, guys, if you're enjoying this. I won't go for much longer, probably 5-10 more minutes. If you have any more questions, please do ask them. But yeah, that is why, again, to come back to the original question, that is why the last two weeks, the halfway through the second week onwards is usually the better time to trade. Only because it's making that distribution. And it's the same with the daily. It's the same with the weekly. It's the same with hint a 15-minute candle. But there's certain nuances on the lower time frame to not get chopped up that I am reserving for those one-on-one students. Those guys who really want to speed run and fast track their mentorship. That's what I'm reserving that for, because it's only fair. Okay? It's only fair that I do that. When did you start seeing changes in your trading journey, and what did you do to change everything? I'll tell you right now, the main thing that brought me to profitability is realizing that I only need one model. As long as I can predict the next expansion, as long as I can predict the next candle, then I have a trade inside of that candle. That's really what took me to profitability and being able to just, make money every month. Okay? That's what took me there. Realizing that I only need one candle's expansion. That's why I make so many one candle videos, because one candle gives the expansion, right? How much is the course? There is a course inside there, but it is a mentorship. It is actual mentorship. It's not just one of these mentorships or one of these courses where I drop and ghost everyone. I think that is so unethical. It's the worst thing about the industry ever, which is why I'm actively there trying to help you. As for your question, just join the waitlist and details will come. The full release is on the 22nd. Yeah, the 22nd, right? The full release is there. I will be dropping full details soon. Just make sure you're on that waitlist. Top link in the description. Click that. You'll be brought over to my page and you sign up there. Make sure you're on that and you will be contacted. Do you trade every session or just focus on a particular session? Good question. I only really focus on New York. Unless I'm trading the hourly time frame, you don't need a session. But if I'm trading intraday, if I'm trading in that daily candle, New York for me. London it's too hard for people, okay, and it's annoying. London is just, it's just annoying. You don't need London. London needs specific conditions to be a very good session, and I am willing to give up though a few trades a month, like maybe 2-3 trades a month that I take in London, so I skip it altogether. I'm willing to give those up for more information in New York every single day. So let me repeat. I am willing to give up those 2-3 missed trades in London a month for more information during New York every single day. Thank you, sir. Your level of engagement is unmatched. Thank you very much. Thank you for being here as well. I'm sure you guys can tell I'm passionate about this, but this is why I speak about raising the bar of education. It's too low right now. People don't spend this much time doing things. People don't tell a story behind price. It's just gaps and order blocks. But yeah, anyway. When do you decide what session to use? One kind of theory. Well, I trade New York. If London has been accumulation, think about this concept of, well, this right here. Think about this. So let's pretend, real quick, and I'm going to do like 5 more minutes, by the way. But let's pretend this is London. Consolidation. What comes after a consolidation? A manipulation and then expansion. So let's pretend that's Asia and London does that. What will I think New York does? That. So each session ties into the other. Okay? No, not particularly Romeo, but there's many. Actually, I'm speaking about the community as a whole. I think the education is really poor. Thank you for being here. Okay, I'm gonna end it here. I'm gonna leave it here. I don't want to dive too much into it when I'm getting a bit fatigued. But thank you all for being here. I'll do much more of these if you enjoyed it. Loz is fine, by the way. If you enjoyed it, I'll do a lot more of these. And guys, if you want one-on-one coaching, that top link in the description, sign up for the waitlist. Make sure you're on the waitlist. Again, it closes on Monday. You only have a day and a half. So make sure you're on that waitlist if you want more of this. All right, thank you all for being here. I'll wait a couple more. See if we have any messages. But yeah, thank you all for being here. I'll do many more of these if you want that. Let me know if you want it. And please do drop a like as well. Drop a like on the video. Thank you. Really helps boost the algorithm. Thank you guys. Thank you all for being here. I wish you all good luck trading. Enjoy your Saturday, right? Yeah. Enjoy your Saturday nights. Enjoy your Sunday tomorrow as well. Happy studying. And good luck and good trading as always. Thank you everyone for being here. Okay, let's end it here. Thank you all for being here. And I'll see you guys later. Thank you. Get the likes up, guys. I'll do more. Thank you.